Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Today, we're looking at the statement of financial position for a cooperatives business. And yes, that is the balance sheet for the cooperatives business, right? So the question that I'll be using is 2009, question 7. So that is CSEC 2009. That's a May paper. The question read, don't forget to read your question. The question read, the pig farmers cooperatives has a membership of 100 farmers. Each member has 15,000 shares at a price of $1 per share. The balances on the books of the cooperative on September 30, 2008 were as follows. And we're going to look at each item of the question before we look at what is required. Now, the cooperative issued 15,000 shares of $1 per share to its members, and there are 100 members, right? 100 farmers of the cooperative. So it therefore means that in terms of share capital, the value generated there is the 15,000 shares times $1 times the number of farmers, which is 100, and that would give us 1,500,000 worth of share capital. Now we're going to look at each item from the list of balances. We have debtors, and debtors is a current asset. So beside that, I'm going to put CA. We have inventory of feeding supplies, and that would be stock of feeding supplies, and that would be current assets as well. Net book value of equipment, that is a fixed asset. We have some amount of items outstanding there, and this means that these items are in arrears, they are outstanding, they are not yet paid, they are owing. And the following items: mortgage interest, rent, telephone, members, dividend, these are owing by the business. So therefore, they are classified as current liabilities. So remember, before you respond to your question, you need to read through the question, comb through the question, assess the question. We have provision for bad debts, and this will decrease the debtors. So therefore, this item will be used in the current asset section. Long-term investment in other cooperatives. And because it is long-term, it will form a part of the fixed asset. So that would be between the fixed asset and the current asset. So after totaling your fixed assets, you're going to put in your long-term investment. If it was short-term, then of course that would have been current asset. Interest on investment outstanding, because this is investment that the business that has made, and the interest that they should generate is outstanding. It is revenue that is basically outstanding. So therefore, that would be current asset. Net book value of motor vehicles, and this is fixed asset. We have farmland and buildings, again, that is fixed asset. Mortgage, that is a long-term liability. Cash is CA. Bank is CA, representing current assets. Creditors is current liabilities, and the general reserve will be used in the reserve section. Okay, so now that we have looked at those items, we are going to proceed to do part A, which is prepare the classified balance sheet in vertical style of the pig farmers cooperatives as at September 30, 2008. So we're going to proceed to do that. And the first thing that we're going to record are the fixed assets. And don't forget, the fixed assets are land and buildings, motor vehicles, and equipment. So we have farm, land and buildings, and the value for the farmland and buildings, that is 800,000, and it's the net book value that we're entering. So I'm using that very last column, entering it under net book value. We're going to proceed to enter the other item, which is equipment. And the equipment value is $200,000. And the final fixed asset there is the motor vehicles. And the value for the motor vehicles is $130,500. Now we're going to proceed to total our fixed assets. After adding all those items together, we get $1,130,500. And we're going to move into entering our investments. And remember, because it is long-term investment, that is why it is being listed there. Let me ensure that I put in long-term. Investments, and the value for the long-term investment is $400,000. After entering that, again, you're going to total, and that would give us a total of $1,530,500. Next, we're going to move into entering our current assets. So we're going to pick up all our current assets there. And the first one coming from the question is the inventory of farm supplies. The value for the inventory of farm supplies is 65,900. Our next item would be debtors. And our debtors value is 145,000. And we're going to subtract the provision for bad debts of $1,550 from that. So our debtors figure is $145,000, and from that we're going to less provision for bad debts, which is $1,550. When we find the difference between those two, the value that we have remaining is $143,450. Our next item for the current asset would be the investment interest that is owing. So that is investment interest owing, and the value for the investment interest owing is $8,000. Our next current asset is bank, and the value for the bank there is $32,500, and we have cash of $4,000. Now we're going to add up all our current assets, and that gives us a total of $253,800. Our next step is to less our current liabilities, because we'll be ascertaining our working capital there. And our current liabilities, we have creditors of 65,000. We have all this amount that is owing by the business: mortgage interest 10,000, rent 4,000, telephone 350, and members dividend of 105,000. We're now going to record those. Mortgage interest owing, and the value of that is $10,000. We have the rent owing. So all of this is in arrears. Rent owing is 4,000. We have telephone that is not yet paid as well, and that is 350. We also have the members dividend that is proposed, that is owing as well. And that amount there is $105,000. Now, we're going to add up all our current liabilities, and that gives us a total of $184,350. Our next step is to subtract our total current liabilities from our current assets, and that would give us our working capital. And the working capital there is 69,500. This figure, we are going to add it to our total fixed assets and investment there, which is 1,530,500 plus that 69,500, and that gives us $1,600,000. Our next step is to subtract our long-term liability. So less long-term liabilities, and the long-term liability, there was only one, and that is mortgage. And the mortgage value is $70,000. So we're going to subtract that 70,000 from the figure of 1,600,000. So mortgage there is 70,000, and this leaves us with a value of 1,530,000, and that is our total net assets. Now, our final step of the balance sheet is the capital section and reserves. Remember, this section is quite similar to the limited liability company, and we begin with the share capital. And the share capital value, remember, we had calculated that earlier, and that is $1,500,000. To this now, you would add all the reserves. And from this question, we only have the general reserve. But remember, there may be others. And the reserves would consist of all those reserves based on the question. So things like your statutory reserve, special reserve, you may have health fund reserve, etc., education reserve, right? And don't forget that your undistributed surplus coming from your appropriation account is entered right here as well. So our general reserve based on the question is $30,000, and when we add that 30,000 to the share capital, we have a value of $1,530,000. That takes us to the end of preparing the balance sheet, which is a statement of financial position for Pig Farmers Cooperative. And remember that you are presenting your balance sheet in the format where your assets minus liabilities equal to your share capital and reserve in this situation, because you're preparing that of a cooperative. So that was part A of the question. Now we're going to look at part B. And part B asks, Identify the information that should be used to determine whether the cooperative is in a position to meet its current liabilities. Now, based on the question, what would determine that the cooperative is in a position to meet its current liabilities would be the working capital. So that working capital of 69,500 would determine if the business is able to meet its current liabilities. And yes, it is able to meet the current liabilities because our current assets value is greater than our current liabilities. So therefore, it means that if you should pay off your current liabilities now, there would still be $69,500 remaining in terms of current assets. We're now going to look at the other part of the question, which is determine the rate at which dividend is paid, assuming that the dividend owing is for 1 year. And basically, what we have in terms of information is the value of the share capital and the value of the dividend to be paid out to the members. And we're asked to find the dividend rate. First, you have to recall the formula in ascertaining the dividend, and that is the share capital multiplied by the rate, and that would give you the dividend. So we're going to enter all that we have and solve for the unknown. The share capital is 1,500,000. That is multiplied by X because X is unknown, and that would give us a dividend of $105,000. So that is the members' dividend that is owing. Now, in order for us to get X, which would be the dividend rate, that would be equal to the 105,000 divided by the share capital of $1,500,000. And we're going to multiply what we get by 100 to get the percentage rate. And that would give us a value of 7%. And that is it for this question as we look at preparing the statement of financial position, which is the balance sheet for a cooperative business.
Like, share, and don't forget to subscribe.